So let's look at the S&P 500 now. I'm going to give you our multiple time frame analysis looking at SPX at the weekly chart and at the daily chart. Give you some idea of what the cycle analysis looks like in both time frames, and also a little bit of a change for our level for all of our members who get our charts on the S&P 500. We've added in a half cycle, a minor half cycle that really looks like it's very relevant. And kudos to one of our members, and I'll show you who that is in just a moment, who said it's important to look at this, and I think he was right. So here's the S&P 500 cycle analysis. And what you have in here is, well, that big period right in here, that pandemic bubble and the historic valuations as the market moved up to 200% of GDP during this period. This is the period of government and Federal Reserve insanity. This is the period of the Great Reset Phase 1 that is going on right over here. Now you could see these harmonics right here. These big cycles are the broadest, the longest period in these harmonics. And we added in a half cycle. We have third cycles and minor half cycles right now. Now we've done the same thing on the daily chart also, and you can see what it really looks like when we look now. That third cycle looked like it bottomed here, 1/3 of this big harmonic family. Now the minor half cycle looks like it bottomed right over here, and it looks very relevant. What that would give you is a continuation of this rally, maybe a little dip right in here, and then maybe even getting up as high as this would be over close to 4,000 right up over there, which is in alignment with that projection we showed comparing 2008 to 2022. And then moving down, and then that bigger, that yellow area is the big period of risk. As you could see in the previous one, you got that big slam right in there. Well, that's what we think is going to have right there as we are projecting down during that period to 3,500. Now, you see our note right over here, the possible bear market low projection out there is in April of 2023, and that's where we think it's going to be around 3,200, maybe a little bit worse on the S&P 500 as the bear market extends out much further than other people think. So the pattern as we're looking at it right in here, and remember these on the bottom are the cycle brackets. They are not the cycles. The actual cycles is how they appear here on the actual chart. So we're looking for some attempted upside in here, but really a lot of chop, and then the big downside risk comes out here again in August, September, and maybe out into October, where it's likely to be moving down very significantly. Right now, we'll be looking for that bounce, that rally up there to somewhere near 4,400 on the SPY as a potential. Here, when I look at the daily chart, this is really interesting. Now, look at each of those periods where the trough was. And where they all kind of came down together in nested timing, as we call it. That brought you a big decline here, and a big decline here, and a big decline here, and that one comes right out over here. Now we had these minor thirds right in here, and those cycles started to disappear as the minor half really showed up. And I want to give credit to Tobias K., who's one of our members, valued members of course, and we love it when our members put their eyes on our work, and if they see something that is relevant and share it with us and it looks right, man, I'm going to put it on the charts. And that's exactly what we have in here. And you can see the minor half cycle as the relevance in it now becomes more important. So here's that minor half cycle low right in here. Here's that minor half cycle low right in here. And you'll note that that upside move that we had from Thursday afternoon and moving now into Friday is where this rising phase would be coming in. So great job on that, Tobias. As I had looked at this, I didn't give it a lot of credence because the minor thirds really were showing very clearly, and then they disappeared, and then you brought this to me and I said, wow, this really looks right. That in that case, this decline over here to this level below 38.38 has less relevance than it did before, and now the probabilities of our projections up here to at least this 39.72 area and potentially up here to 40.53, 405 on the SPY really looks relevant. And that again follows that bouncing area that we showed in the comparison of 2007, 2008 to 2022. So bouncing time frame right in here really looks right. Now momentum in here is negative, and you can see that looking here at the slim ribbon as it's been moving down right in here. Now it got neutral for a little bit and then turned negative again. So it hasn't turned positive yet. Now when I look at the weekly chart, I'll go back there and you'll see that our important indicator in here for momentum is the reversal scout. You can see that right here, and that is flattening out but still negative. So these are still negative. It needs to do some work. Now I want to note that the NASDAQ on the NASDAQ weekly chart, the reversal scout has now turned positive. So we have some indications of a little better market in here, an extension of this rebound before the next selling wave comes in, and that as you can see right here on this chart, we say that on the daily chart, that next ideal trough is around September 8th, plus or minus a few days. That's when that big next selling period comes in. So the projection now would be to continue this rally up into this area, just below 4,000 to about 40.50 is a potential, and then move to the downside again. Once it breaks out of this triangular shape, you could get a nice impulse to the upside that, of course, we believe, based on the sum of the evidence, will fail and will be moving down again. So that's our analysis for the S&P 500. Thank you to Tobias K. for sharing his work that we have now added on here, which I think is very relevant. And for all of our, especially level 3 and level 4 members, you see something that you believe is important, send it on. I'm going to review it, and if it looks right, it'll be on the charts, just as Tobias has done here. So again, we'll look for a little more to the upside, maybe one burst up to that, into those higher resistances, and then a lot of risk coming into September. That's the look at the S&P 500 multiple time frame analysis.